Hello. As I speak to you on the 5th of May, the markets continue to be volatile. Markets have been oscillating through bouts of pessimism and optimism. It is important to understand that the market volatility is global. Markets are highly synchronized. The correlation between markets globally is very high. The mother market, the US, is setting the trends and others are following. And this trend is likely to continue going forward. Let me emphasize one point. The uncertainty and unpredictability surrounding this crisis is huge and profound. Even the best minds of the world are finding it difficult to give projections and offer the right kind of advice. For instance, recently Warren Buffett, the greatest living investor, was asked what will be the impact of this crisis on the US economy, and he very humbly answered, I don't know. This is the kind of uncertainty and unpredictability surrounding this crisis. Most of the projections are based on some assumptions, and assumptions can go wrong. When there is this kind of uncertainty about the economy and markets, one has to be extremely careful. This kind of complexity makes the decision making extremely difficult. The unknowns are huge and very large, and what we know is very much limited. This makes investment decision making extremely difficult. Let me summarize for you what we know and what we do not know. This will facilitate better decision making. Number one, we know that the global economy will be seriously hit this year. There can be a degrowth, a contraction in global GDP by 3% or perhaps even more. Secondly, we know that the Indian economy also will be seriously impacted. I won't be surprised if the GDP growth turns negative, a case of GDP contracting that also cannot be ruled out. Third, we do not know much about corporate earnings growth this year. Nobody is making any projections regarding corporate earnings growth for this year. The simple answer is, again, we are in uncharted territory, we do not know. Fourthly, this is something very important. We know that there is huge injection of liquidity in the global financial system. The leading central banks of the world have been printing currency and injecting this money in the global financial system. Globally, interest rates are at all-time low, historical lows. When interest rates are so low and huge amount of liquidity is available, well, when situations stabilize, a lot of this money can come into the asset class equity. This is very important from the market perspective. So these are the things that we know for sure. Coming to a sort of a sectoral analysis, we know that some sectors will be badly hit by this crisis. Some sectors will be hit only mildly. Some sectors will stand to gain also. We know that pharmaceuticals will be one segment which will not be impacted by any demand destruction. In fact, there is increasing demand, increasing exports, so that sector is likely to do very well. The IT segment is working, there is work from home, and the IT companies are not leveraged, they are sitting on a lot of cash, and they gain from currency depreciation, rupee depreciation. So that is one sector which will be relatively safe. Thirdly, telecom is a major beneficiary of this crisis, because when work from home is increasing, data consumption will explode, benefiting telecom companies. Already these are reflected in the stock prices of these sectors and companies. Again, we know that financials are vulnerable. Banking sector is likely to be impacted, but not all banks will be impacted in the same way. The best banks will gain because money is available cheaply, and when they lend to good quality clients, they may make a lot of money, but generally the financial system is very much vulnerable. So we should be making investment decisions based on these insights regarding what we know about the global economy, the Indian economy, and the different sectors. There are three events which are likely to event the markets going forward. Number one, the news surrounding the virus. We do not know if there is some positive news regarding a vaccine that can be hugely positive for the markets, facilitating a V-shaped recovery, but it would be unrealistic because experts tell us that you need several months for a vaccine to be made available on a large scale. So it would be unrealistic to be very optimistic on that front. Now, if there is some positive news regarding an existing drug becoming very effective, that also can be a very positive news. So watch out for the macros relating to the virus, because macros relating to the virus is now more important than macros relating to the economy. Secondly, watch out for the further monetary initiatives from the Reserve Bank of India. The RBI has no choice but to cut interest rates further and go for further monetary expansion that will be good from the market perspective. Thirdly, watch out for the initiatives from the government. Another package is coming, and how big this package will be and how they are going to benefit different companies going forward. This is one area that has to be looked into. So these are the things which we should be watching for. Also, it is important that the government should be announcing and implementing relief and stimulus packages without too much of a fiscal expansion, because that can lead to a ratings downgrade, flight of capital, and very undesirable consequences. That is why the government is extremely cautious regarding relief packages. So these are the things that we should be watching for going forward, the events that should be impacting the markets. And this is the time when investors have to be cautious. This is not the time to be very aggressive regarding investments. We have to be cautious. We have to consider a large number of factors before making investment decisions. We have to be in cash also, so as to minimize the risk. So let's hope for the best. Let's wait for better times. Thank you.